taking a look at things today and what the market's got an eye on, it is that MPC decision out of the Monetary Policy Committee. It's largely expected to keep rates unchanged at 6% at today's meeting. Are you in line with consensus?
Yes, definitely. The objective of central bank is to maintain a low interest rate regime and to maintain stability in the macroeconomic indicators. So we don't expect much. We expect them to maintain the 6% for the CBR, 4% for. We expect them to maintain the 4% for the cash reserve ratio. Now, there are inflationary pressures due to the expected drought, and also high commodity prices. But this is mainly cost push inflation, not really demand related.
Well, of course, we'll be keeping an eye out on that. In the meantime, what's the kind of commentary out of banks at this stage of the game? I mean, this is a topic that we've engaged in a million times on the show, but seeing very little movement on that side in terms of banks starting to lower their rates to stimulate growth in the Kenyan economy even further than we're seeing right now.
Well, this rate is mainly for banks borrowing from central bank, and we don't see a trickle down effect to consumer lending, just probably marginally because of competition. But banks still are a bit cautious in terms of trying to maintain quality loan books, and at the same time they're just trying to get the right type of borrowers so as not to worsen their non-performing loans.
Let's take a look at one of the sectors that, yes, has been suffering as a result of the drought that you had highlighted earlier, the agricultural space, but has also seen the benefit of higher commodity prices really filtering through and cushioning some of that lower production cost. How are you viewing the agricultural sector at this stage?
Well, the agricultural sector has to be viewed with caution because of the exogenous factor, mainly the weather and also global prices. Because while at the moment there's a lot of global demand for food, but because of certain restrictions by certain countries in terms of exports and movement of goods, then it requires a lot of caution. But currently it's definitely a good investment.
So taking a look at some of the players in that space, I mean, we've got a player like EGads. It's the only pure coffee play in the market. To what extent are you looking at exposure there? Because if the bottom falls out of this coffee price, so too can the bottom of that share price. So quite a risky bet to take, one would assume.
Yes, definitely. As I've just mentioned, it's very risky because while it's not necessarily a sustained upward movement for the coffee prices, and at times when there's, say, some glut or probably unfavorable weather, then they'll definitely suffer certain shocks.
Kakuzi, on the other hand, is a player that is a little bit more diversified. It's a tea player. It also produces avocados and a potential real estate play where all three legs here have upside potential. So to what extent is this then a better bet to be taking?
Kakuzi will definitely be a better bet because of the range, the revenue streams from the various products that they offer to the market. So in the event that probably there's some price distortion in one of their products, then definitely the others will come in to reinforce their revenue streams.
Let's take a look at that liquidity situation, because we know that that posed quite a big constraint to investors who were looking to, really plow into the agricultural sector. To what extent is that still a problem? Well,
it's a problem to some extent. It's not really as big as it may have expected to be, but you find investors are still focused in picking up those stocks, and there's still a lot of optimism going forward.
Well, talking about optimism, after the cloud that hung over Kenol Kobil for the longest while, we're seeing that share price managing to gain some traction yesterday. That on the back of the announcement that it has acquired the assets of Phoenix Uganda Petroleum, consisting of a fuel terminal, an office block, and 3 gas stations. Your view on Kenol Kobil?
It's definitely a buy, strong fundamentals. Kenol Kobil is actually one of the few oil companies that have focused on regional presence, and they want to ride on the East Africa community integration. At the same time, they are looking forward in terms of the oil discovery in Uganda. They want to place themselves strategically in order to reap the benefits from that.